So for this session, we will learn raw material inventory system. We have two kinds of inventory system. First is your perpetual, and second is your periodic. So the difference between the two is that in the perpetual inventory system, you maintain stock cards. Okay? So you maintain stock cards for each type of materials. So you do this because you want to determine the inflow, outflow, and the balance of your material in relation to the quantity as to amount and as to peso amount. And to check and reconcile your inventory stock card and your raw material inventory ledger balance, to determine its accuracy, you have to perform physical count periodically. Sometimes you do this at the end of the year or whenever the management intends to do so. So that is your check and balance. So for your periodic, you do not maintain stock cards here. The only way you know the balance of your raw material inventory is through a physical count to determine the units on hand. So you determine the units on hand by multiplying the latest unit cost available. Also, note that under this method, the cost of materials issued is not directly determined. It is indirectly computed by deducting the remaining inventory in hand from the total available for use. So here are your pro forma journal entries for your purchase of raw materials and your issuance to conversion process. So first, for your purchase of raw materials, you debit raw materials inventory and you credit either accounts payable or cash. So the cost of raw materials is debited to raw materials inventory when the materials are received, meaning when you receive it from your supplier. This account is debited for the invoice cost or the purchase price of the inventory itself and the freight cost, so the transportation costs, which is chargeable to the purchaser, which is us. The purchaser is us. It is credited for purchase discounts and purchase returns and allowances. So these are your deductions to your cost. Upon receipt of the materials, the inventory clerk updates the inventory ledger and stock card. After all postings have been made, the balance in the raw materials inventory account should equal to the sum of the balances in the raw materials ledger card. So this is your pro forma entries for your purchase of raw materials. So in case there are, let's say, defects or there are damaged goods in the materials received, you have to perform a purchase returns. So your entry for that would be a debit to your accounts payable or cash, and you credit your raw materials inventory. Just a reverse entry for this. So when time comes when you have to convert your raw materials into finished goods, it will be transported into the work in process account. So when raw materials are issued to production, you credit your raw materials inventory, okay, and you debit your work in process for direct materials and any manufacturing overhead that relates to indirect materials. So raw materials are transferred from the warehouse to the production department. A material requisition form completed by the production supervisor is the basis for the raw material inventory clerk for the release of the materials. A copy of the material requisition form goes to the accounting department as basis for recording the issuances and for entering the direct material cost to the individual jobs in process. So we have successfully issued the raw mats to the production process, but sometimes it happens that there is a wrong production forecast. Let's say the production supervisor initially requested for 1,000 units of material A, but after careful examination, when they received the 1,000 units of material A, the production supervisor determined that they just need 500 units of material A. So what the production supervisor has to do is that he will again reverse the entry for the issuances. So he will debit raw materials inventory and credit work in process and manufacturing overhead for 500 units. Another term for freight in is transportation costs. So the concept of freight in is, this is your delivery fee from the warehouse of your supplier into your own warehouse. So there are two recognition criteria in accounting for freight in. For perpetual, the freight is charged to raw materials. So it means this is a capitalizable cost. So your cost of materials, the total cost of your material is your invoice cost, the purchase price of your inventory itself, plus the freight in or your transportation cost. Sometimes the freight in, sometimes there are a lot of raw materials delivered in one delivery. Okay, so there are different types of materials delivered in one delivery. So you have to apportion it according to each material. So there are three types of proportionating it. First is your units purchased. Second is according to your invoice cost. And third is according to your weighted cost. Also, the cost of your raw materials issued already includes the part of the freight. Again, this fourth bullet or this fourth line, this refers from the raw materials to the conversion process. So when you transport your raw material inventory to WIP, it already includes a part of the freight. Okay. So for the other recognition criteria under periodic inventory system, freight cost is charged in a separate account, and it is maintained under freight account. So for your invoice cost or your purchase price of your raw materials inventory, it is charged under the purchases account. So the freight is apportioned between the issued and unissued raw materials inventory when materials are issued to production. And last, the freight allocated to raw materials is debited to work in process inventory together with the invoice price. Let's take this as an example for your purchase of raw materials and recognition of freight in. So Hydro Flask purchased the following raw materials from steel company with terms 210 and net 30. Hydro Flask paid 1.5 as freight charge. So in here, you have two types of raw materials. You have alloy and copper. So they have each has 2,000 units. The weight allocated for alloy is 2, while for copper it is 3. The unit cost per material for alloy is 10, and the unit cost per material for copper is 15. 2,000 times unit cost, you have 20,000 here, and 2,000 units times 15 pesos of copper, it is 30,000, giving you a total invoice cost of 50,000 pesos. So now let's record the purchase. So for here, under perpetual system, we know that under perpetual system, the total cost of material is your invoice cost plus your freight charge. So we add the total invoice cost of 50,000 plus the 1,500 freight charge, and you debit raw materials inventory, 51,500. Then you credit accounts payable for 50,000. And if I may ask you, why do we credit accounts payable and not cash for the 50,000? It is because the problem states here that it was purchased with terms 210 and net 30. So when you see this statement, it is already a hint that it is made in account. That's why you recognize accounts payable. Okay, so you credit cash 1.5 for the freight. Again, why did I record cash and not accounts payable for the freight of 1.5? It is because of the word here, paid. So this is a hint for cash payments or payments made in cash. Okay. So you recognize here cash as 1.5. So to summarize, under perpetual, debit raw materials inventory for the invoice cost plus your freight 51,500, and then you credit accounts payable 50,000 pesos, and the credit cash 1.5 for your freight. However, for your periodic inventory system, again, the it is a general rule that invoice cost will be recognized in the purchases account, while freight will be charged separately under freight account. So this is not part of your total raw materials cost. Okay. So you debit purchases account for 50,000, and you credit also accounts payable 50,000. Again, accounts payable because of the terms here as indicated here. So you debit freight for your freight charge. Again, this should be a separate account, and then you credit cash 1,500 because of this statement here, paid. Okay, credit cash. So in here, we would like to determine how to allocate the freight in case there are multiple raw materials in one delivery. Again, so for this one, for a single freight charge of 1,500, two types or two kinds of raw materials were delivered to you. So you have your alloy and your copper. So again, going back, you have three types of knowing how to allocate your freight. First is through your invoice cost. Second is in your units purchased. And last is through your weighted units. So using the invoice cost, all you have to do is plot this. Okay? So you plot your two types of materials and use the invoice here, invoice, as your variable. Okay? So you sum the total invoice for each material. So 20 plus 30,000, this will be equal to 50,000. And then just get the proportionate share for each material. So 20,000 divided by 50,000, you would be getting 40% and 60% for copper. So from here on, and you will use this in the other determinants of how to know the allocation of freight. You just multiply your allocated percentage to the freight charge, which is 1,500. So 40% of 1,500 is 600, and 60% of 1,500 is 900. So you add the total allocated of freight in terms of peso amount, 600 plus 900, you will get 1,500. Again, check and balance with your with which is stated in the problem, 1,500. You will have an equal amount. Okay. So to get the total amount charged for each type of material, all you have to do is add the invoice cost plus your freight. So in this scenario, we already know the freight allocated for each type of material. So again, the formula for determining the total cost of raw material is invoice cost plus freight. So we simply have to add the invoice here. For alloy, you have 20,000 plus 600, you will be getting 20,600. And for copper, 30,000 plus your freight of 900, you will be getting 30,900. Add these two, you would be getting 51,500. Again, this is similar with your pro forma and journal entries with, using perpetual inventory system for purchasing raw materials. A while ago, we debited raw materials inventory for the amount of 51,500, and then we credited accounts payable for 50,000 pesos, and again we also credited 1,500 for freight. Again, this should be equal with your purchases journal entries. So allocating via units purchased, also similar with your invoice cost, but what we have to change here, is the variable, which should be the units. The problem is this one. So you have 2,000 each for each type of material. Okay, so 2,000 divided by 4,000, it should be 50. So let's split it to 50-50. So half of 1,500 freight charge would be 750. So the total amount charged for each type of raw material, for your alloy, you will be getting your invoice cost of 20,000 pesos plus your freight charge of 750. It will be equal to 20,750. While for copper, you add your allocated freight of 750 pesos plus your invoice cost of 30,000, you would be getting 30,750, which again would be equal to 51,500. Similar with your invoice cost here. Okay? The only difference between these two is how you allocated the freight to each type of material. And last is your based on weighted units. Okay? So what the variable that you would be using here would be your weight. Again, this should be 1, alloy should be 1, and copper should be 4. So for your alloy, 1 divided by 5, it would be 20%. So for copper, you would have 80%. Okay? So 20% of 1,500 is 300 pesos. While 80% of 1,500 would be 1,200. So again, to get the total amount charged, you add again. For alloy, it would be 20,300. While for copper, it would be 31,200. Add the two, you would get 51,500. Okay, so this concept, you only want to know here how much freight was should be recognized by each type of material. Okay, because when you transfer this again to the to work in process, or when you send this to production department, you should be able to know what is the true amount of the raw material. Again, the amount of raw material includes your invoice cost plus your freight cost. So for your inventory valuation methods, you have your FIFO, or your first in, first out, and you have your average cost, which has 3 components: simple average, weighted average, and moving average. For this one first, let's solve this example for FIFO. Okay, so given here, over here are your transactions. So for July 1, you have your opening balance of 800 units at 98 pesos. And you have your purchases on July 2, 5, 7, 10, and 15, as well as raw material issuances on July 3, 8, and 20. So we would like to determine how much is the raw materials available in terms of quantity and in peso amount, as well as your raw materials issued in terms of quantity and unit and peso amounts. And last, your raw materials inventory, or your raw materials ending. Okay, so let's solve. So for your July 1, you have an opening balance of 800 units at 98 pesos. So what we have to do here is multiply the 800 units opening balance times the unit cost of 98, and you will get 800 times 98, you would get 78,400. So your next transaction is a purchase of 1,000 units at 100 pesos each. So that would give you a total cost of 100,000 pesos. So 7.2, you have 1,000 units at 100. That would give you 100,000 pesos. So again, to give you an idea, under FIFO method, raw materials inventory is reported at latest cost, while the cost of raw materials used is reported at earliest cost. So the meaning of the raw materials used is similar to raw materials issued, and you would be using the reported earliest cost. Okay, so since in July 3 we have a transaction relating to issuance, what we will do
is use the 1,000 units using the earliest cost possible. Okay? So you might be wondering here, sir, why is it that I have an issuance of 1,000 units? What would I use? What unit cost here will I use? Would I use 98 or 100 pesos? So the answer here is split. For 1,000 units of issuance, you would need to empty out this first, your July 1 transactions. Okay? And if there is any remainder, you get it from your July 2 transaction with a unit cost of 100 pesos. Okay? And the total amount of the units, when you split 800 and 200, you should be able to get units issuance equal to this transaction. Okay? So let me do this for you. In the book, there is a separate, let's say, format for answering this. I'm just showing you another version for your reference. Okay? So for July 3, let me use a red pen for issuance and black pen for purchases and opening balances. Okay? So for July 3, I have 1,000 issued. So again, I will get the earliest cost. The earliest cost determined is 98. But since July 1 transaction has only 800 units, I would be getting first the 800 out of 1,000 using the unit cost of 98 pesos. So I would be getting here 800 and 98. That would give me a total cost of 78,400. Okay. And then the remaining 200 out of the 1,000, I would be getting it for the unit cost for the July 2 transaction. So that is 100 per unit. So that would give me here 20,000 pesos. The total of this would be 78,400 plus 20,000. 78. That should give you 98,400. Okay? Let's just put it here for your reference later. And let's just take this out. Okay? This is already done. We've already used this. Okay? And out of the 1,000 of the July 2 transaction, we have already used 200. So let's just also put an X here for the 200 and a note in the side note here of remaining 800. Okay? Already put an X here. Okay. So next, on July 5, I had the transaction of purchasing 1,500 units at 105 pesos per unit. Okay? So simply just have to multiply the units purchased times the unit cost. So for July 5, we put here 1,500 units multiplied by 105. That would give me 157,500. 157,500 here. Okay. So next transaction, again a purchase transaction for 500 units. 500 at 110 per unit. That would give me 500 times 110, 55,000. Okay. So at this point, we have a total already of 1,500 plus 500 plus 800 here. We have 2,800 raw materials inventory. Okay. So next transaction is on July 8. There's an issuance to production of 1,200 units to Department B. So what we have to do here again is get the earliest cost. Okay, so let me put here. Since the issuance is a total of 1,200, what we have to do is get the earliest transaction. Okay, so in July 2, we still have a remaining of 800 units available for use with a unit cost of 100 pesos each. Again, we have a side note here. This still does not have an X. So we have to put an X on it and consume here in the July 8 transaction. Okay. So we put here 800 at a unit cost of 100. That would give us 80,000. Okay. So let's already cross this out. And we still need 400 units. Okay, since it's already emptied out the July 2 transaction, the next available or the earliest available is the July 5 transaction amounting to 1,500. So we still need 400, right? Because we already issued 800, but still there's still lacking of 400. So let's get the 400 units from the July 5 transaction. Okay, so use it here, 400. And we get 105. That would give us 400 times 105. That would give us 42,000 plus 82,000. We will get 122,000. Clear? Okay. Side note again. We already consumed 400. Let's cross this out. So there's just a remaining of 1,100 units. Okay. Next transaction is your July 10 purchase as well as your July 15 purchase. So let's just record it. So 500 times 108, that would give us 54,000, and 800 units times 105, that would give us 84,000. Okay. So here 710, 500 at 108. Sorry, that is 54,000. Okay. And for your July 15, that would give you 800 times 105, 84,000. 800 times 105, 84,000. Okay. So that's the last purchase transaction for the month or for the problem. And the last transaction is an issuance. Okay. We issued 2,000 units to Department C. Okay. So again, we will use red pen. Let's just put the date first and determine where would we get the 2,000 units needed for production. Okay. So again, let's go back to the concept that for the raw materials used, you use the earliest transaction for to enable to get the earliest cost. So July 1 transaction is already emptied out, as well as July 2 transaction is already emptied out. However, for your July 5 transaction, which is a purchase transaction, you have only consumed 400 units, meaning there is still 1,100 units available for production. Okay, or raw materials available for use. Okay, so we would get this. We would use this 1,100, the 7.5 transaction, for the 2,000 peso, 2,000 units requirement. So let's get this 1,100 units. Let's get the unit cost of 105. That would give us 1,100 times 105. That would give us 115,500. Okay, 115,500. So this is already emptied out, the July 5 transaction. You still need 900 more, right, in order to satisfy the 2,000 requirements. So the next earliest is the July 7 transaction, which has 500 units with a unit cost of 110. So let's empty it out. Okay, it's already emptied out. We'll transfer here 500, unit cost of 110. Let's just copy this. We have 55,000. Okay, so 1,100 plus 500, that will give us 1,600, right? So we've already satisfied 1,600 units of of raw materials, but we still need 400 more. Okay, so the next earliest is the July 10 transaction. Okay, so let's just get a portion of 400 of this July 10 transaction in order to meet the requirements for the July 20 issuance. Okay, so let's put a note here that 400 was already consumed. Let's put an X here. Okay, and that only 100 is remaining. Okay, so let's put it here, 400. Okay, so with a unit cost of 108, so 400 times 108, that would give us 43,200. Okay, so add this up. We need to verify. So 1,100 units. We got this from the July 5 transaction. The 500 units, we got this from the July 7 transaction. While the 400,000 units, we were able to get a portion of this from the July 10 transaction. So we add 43,200 plus 55,000 plus 115,500. The total raw materials issued for July 20 would be 213,700. Okay. Okay. So in here we already know we were already to properly allocate the purchases as well as the issuances. Now what we need to do is to obtain the balances for your raw materials available for use. Okay? Your raw materials issued or used, as well as your raw materials inventory or your raw materials ending balance. So your raw materials available for use, these are your this is the sum of your purchases as well as your beginning balance. So let's just refer to this, to the black pens. So we have 800 plus 1,000 plus 1,500 plus 500, 500, 800. We add those. 800 plus 1,000 plus 1,500 plus 500 plus 1,300. That would give us 5,100 of 500,100 units. Okay? And the total cost attributable to that would be 528,800. Add this up. Okay, the black ones. 528,900. Yeah. 528,900. Okay? So for your raw materials issued, these are your red font. Okay, so the raw materials issued is 3,000 units. Okay, so this is 3,000 units at 434,1,000. Okay, 434,100. Sorry, 434,100. So to verify this, just add this 3. Okay, so we have 98,400 plus 122 plus 213,700. You have 44,100, and you just subtract your available with your issued, and you'll be getting your raw materials inventory ending. Okay, so get this one, 5,100 units less 3,000 used, you would be getting 2,100 units. And for your peso amount, subtract 528,900 less 434,100, you'd get 94,800. Okay. Yeah. So whatever happens, for FIFO, under perpetual inventory system and periodic inventory system, your raw materials inventory ending would always be the same. Okay? Because in here we were able to determine the raw materials inventory by subtracting this available and used. Okay? But there's a shortcut to it. For periodic, again, the concept of periodic system is the latest purchases are normally left in the warehouse. So, the raw materials issued are the residual amount after deducting the physical inventory counted from the goods available for sale. Okay? So, what we have to do here, you've already determined that there's only remaining 900, sorry, 2,100 units, right? So, um, what we have to do here is this one. You just get that. So, oh, I'm sorry. This should be 4,200. Sorry, this should be 4,200, sorry. And your ending should be 900. 100 units. Okay? So, again, just to clarify, you might be confused. To get the units, you just add this red pen. So, 800 plus 200 plus 800 plus 400 plus 2,000. You'll be getting 4,200 raw materials issued to production. Okay, so the remaining 900, you can work this back. In just looking at this one, you'll be able to determine what is the remaining inventory at your end. Okay, so again, we've already emptied this one, your July 1 transaction as well as your July 2 transaction and your July 5 and 7 transactions. And a part of your July 10 transaction, you've already consumed 400 of that one, right? So, again, you get the earliest cost. We know that in July 10, there's only remaining 100 units left. Okay? So, you get this 100, you get this 100, and you multiply it by its unit cost. So, we put it here. 100 units times 108. That would give you 10,800. Okay? So that is your raw materials inventory for this transaction. And you still have an unused raw material from your July 15 transaction. So you just have to copy it, okay? And add this to your remaining amount here. So we have 800 units times 105, that would yield to 84,000 pesos. Okay, so sum this up. This would be 800 plus, okay, so 94,800, which is also equal to this. Clear? Okay, so just to recap, again, this is a different approach. What I've used the different approach. This is not the same with what is the method or format used in the book. So just to this is like a check and balance for you guys. So again, what we have to do, the concept here is always lay down the purchases. Okay, so for the purchases, what you just have to do is multiply your units with the unit cost. You'll be getting your total cost. The only thing that will change here is when you have issuances. For your issuances, always refer to the earliest transaction. When you're in the earliest transaction, use that units or consume that units as well and use that unit cost. In case it's already emptied out, refer to the next earliest cost or earliest transaction. Okay, so again, from here you will be able to determine your raw materials available for use, your raw materials issued, as well as your raw materials inventory. Okay, so for this, we will determine the economic order quantity and how to compute it and what is the purpose of this. So the purpose of the economic order quantity or EOQ is that the purchase order which results in the minimum total inventory cost. In determining the quantity to be ordered, the cost of placing an order and the cost of carrying inventory must be considered. So there are 2 points to be considered here. First is your ordering cost. Second is your carrying cost. So let's determine first what is the formula for EOQ. But before jumping to the determination of the formula, let's first discuss this. So for EOQ, the concept of this is for us to determine the cheapest price for the cost of the inventory. I mean the ordering cost as well as the carrying cost. Where will you be able to reap maximum benefits? Okay, so you have to determine first your annual units required. So this is for this one. Let's just label it as A. And then determine your ordering cost. So ordering cost, this does not mean this may seem small amount, but in reality, ordering cost refers to the costs that are attributable to insurance, taxes, those costs that refer to the back office. So examples of this are your cost of placing and receiving orders, like cost of processing documents, insurance for shipments, and unloading costs. So this is a one-time thing, okay? This is a one-time cost. So every time you order, this is the equivalent cost, okay? So in this case, for this order, you will spend 30 pesos, okay? So your carrying cost per unit, so the component of this one, this includes your cost of storage, insurance, inventory taxes, obsolescence, spoilage and pilferage or theft, opportunity cost of funds tied up with the inventory and handling costs. Okay, so now that we've known this, we can now plot our EOQ formula. Let's label ordering cost as OC and carrying cost or handling cost as CC. Okay, so now that we know our inputs, let's now place it in the formula. So EOQ is equivalent to the square root of 2 times your annual units required, and then the product of this would be multiplied to the ordering cost, your OC, and your numerator would be divided with your carrying cost per unit or your CC. Okay, so now this is already our plotted formula. Let's now replace it with the actual figures. So EOQ is equals to 2 times 4,800, your annual units, times your ordering cost of 30 pesos, all over your carrying cost per unit, which is 1.25. So let's multiply first 2 times 4,800. It is 9,600 multiplied by 30 all over 1.25. Okay, so 96 times 30, 288. Okay, here you will get 288 divided by 1.25. You will get 230,400, and the square root for this would be 480. Okay, so you might be wondering, sir, what is the significance of the 480? What is this? Is this peso or this is in units? Okay, so this one is in a per unit basis. Okay, unit. What is the meaning of this? This means that this should be the quantity of units that you should order in order to reap the benefits of the ordering cost and carrying costs. When you order this one, you will get the least the least ordering and carrying cost. Understood? So, in Filipino, we call this, sulitin mo, makakatipid ka sa ordering carrying cost kapag 480 units ang in-order mo. Okay? So, now that we've determined the EOQ, let's now answer the following questions. How many orders are made each year? So, the formula for this is you divide your annual units required, or letter A, with your EOQ. Okay? So, letter A divided by EOQ. So, you will get your annual units required is, sorry, this should not be in peso. So, both of these should be in peso. So, your annual units required is 4,800 per year, divided by your EOQ, you would get 10. Okay? Oh, sorry. Your EOQ, yeah, you would get how many orders are made each year? You will order 10 times. Okay? You will order 10 times for the year for you to be able to satisfy your annual units required. Okay? Since every time you order, you only purchase 480 units, you have to do it 10 times in order to satisfy this requirement. Okay? So for the second question, what is the frequency of placing an order? So you multiply this with your year, with the total days for a year, which is 360 days. Okay? Divided by 10. You would have to purchase every 36 days. Okay? So, when they ask what would be the total ordering costs, the formula for that would be your number of orders per year, okay, this one, multiplied by your ordering cost. So, as I've said a while ago, the ordering cost is a one-time payment per order. So, whatever the annual units required is, okay, let's say this is just 100 units, or let's say 1 million units, but the factor here is the ordering cost, which is a straight line payment. Okay, this is a one-time cost. So you multiply your ordering cost by your how many orders are made each year. So you have here 10 times. You order 10 times and the ordering cost is 30. You will get 300 pesos. Okay? So that is your total ordering cost for you to satisfy your annual units required. Okay? So for your total carrying costs, the formula for that would be your average inventory multiplied by your cost per unit. Okay? So for you to get your average inventory, you average this. You average your EOQ, and how do you average it? You divide this by 2. Okay, so one formula here is EOQ divided by 2. Okay, so let's just replace it. 480 divided by 2. Okay, times 1.25, your carrying cost per unit. Again, per unit. Okay, so the answer would be 240 times 1.25, you will get 300 pesos as well. Okay, so the final question, what is the total inventory cost? You just add your total ordering cost as well as with your total carrying cost, you would get 600 pesos. Okay? So, wrap up for this. What is the significance of EOQ? Because this has been used for for more than 100 years. Okay? So, the significance of this is that you were able to determine that for your annual units required, for 4,800 units of inventory that you need, you have your total inventory cost, or to purchase this, is you just gonna spend 600 pesos of that, and that will only happen, you will only have to spend 600 pesos if your EOQ is 480 units per order. Understood? So also, the significance of the EOQ is a trigger for your reorder point. Okay, so we all know the concept of reorder point, that when the stock is nearing or already equal to the reorder point or safety stock, it is calling for us that we should place our order. Okay, and considering the lead time. Reorder point. So a while ago, we've determined the concept of EOQ. So this is the continuation of the determination of EOQ. So once the EOQ has been determined, management must decide when to place the order, and the order point must be established. If the lead time and the inventory usage are known, determination of the order point is easy. So lead time is the period between the placement of the order and the receipt of the materials ordered, while inventory usage rate is the quantity of materials used in production over a period of time. The order point should be where the inventory level reaches the number of units that would be consumed during the lead time. So let's assume the following facts. Let's assume that the expected daily usage of an item of material is 100 units. This one, your daily usage. Okay? And the anticipated lead time is 4 days. Okay? You have your lead time 4 days. So, and our EOQ is 500. So, when you multiply this one, it suggests that in 4 days time, if you divide your EOQ with your daily usage, it would suggest that in 5 days, it would be unavailable or out of stock, right? So this is where the reorder point enters. So the formula for the reorder point is your daily usage multiplied by your lead time. Okay. So let's just supply. We have 100 units times 4 days. We have 400 units. Okay. So what does this mean? This simply means that for you to order, for you not to have shortage in stock, because you only have in EOQ 500 and your lead time is for 4 days. Again, the definition of lead time is the period between the placement of the order and the receipt of the materials ordered. So it suggests that your supplier, when you order to him, let's say it is January 1 today, when you place your order in January 1, you will only receive it on January 4. So there is a time gap of 4 days for you to receive your 500 units ordered. Okay, so it states that when your inventory level is now at the 400 unit mark, okay, or when the inventory level of materials is reduced to 400 units, an order should be placed for 500 units or your EOQ. Okay, let's say that today is January 1. Okay, on January 1, your inventory level was still 500. Okay, And you know that your daily usage is 100 a day. So on January 2, your usage or your inventory level is just 400. Okay? So this would be your trigger point on January 2. You now have to make, you have now to place, you now have to call your supplier for you to order 500 units of your materials inventory. Because if you're late, if you order on January 3, which is now just 300, you won't have sufficient inventory for January 6. Right? Because if you call here, if you call on this date, and then count 4 days, 1, 2, 3, 4, your order would you would receive your order on January 6. So you will now be having again 500 units. But then again, if you're late, if you call on January 3 instead of January 2, count 4 days from January 3. 1, 2, 3, right? You would have an A stock here. It would be unavailable. So thus, your production would be disrupted and no sales would be generated. Okay? So that's the trigger of the EOQ. After EOQ, you will be able to determine your order point. And in your order point, you use these two factors: your daily usage as well as your lead time. So in this session, we will determine how to compute for the traditional costing system. Okay, so this is how we do it normally. This is without just-in-time or backflash accounting. This is just plainly traditional costing system. Okay, so let's start first with preparing our pro forma journal entries, and together with that, we will also prepare key accounts so that we will be easier to navigate how much is the balance of your line items. Okay, so first you have your transactions here. So you have purchases, and there were requisitions to work to productions. You incurred direct labor. You recognize overhead, and then you apply this overhead to conversion costs. And last, you produced, and last, all your production were sold. So meaning 100% of those that were produced were also sold at the same time. Okay, so let's first journalize this for letter A. So purchased 170 pesos of raw materials. So we do here, we debit materials and we credit accounts payable. Okay, you have raw materials here, 170, and we credit accounts payable for the same amount. Okay, so let's put it here. Let's prepare the account for your raw materials. Okay, so next is the problem here states that all purchases were requisitioned. So what does this mean? What does the term requisition mean? If you still recall a while ago, there are different types of forms in the production department. You have there your materials requisition form. So the material requisition form is prepared by the production supervisor, wherein it states the quantity and the unit cost of the materials that will be used for the production. Okay, so in this case, the 170,000 pesos worth of raw materials will all be used for production. So we will convert this now from raw materials. It will now jump into the work in process department. Okay, so we will just reverse this. We will credit raw materials for 170 since all were requisitioned, and we will debit work in process inventory. Okay, so we will recognize 170,000 worth of WIP
and we will close out the raw materials account. So that is nil already. Okay.
So next is the company incurred a direct labor of 80,000 pesos. So direct labor, this enters not in the first stage, not in the raw material stage, but in the work in process stage. So we debit work in process and we credit accrued accrued payroll. Okay, for our payables for the services rendered by our employees.
So debit WIP, and we credit accrued payable for the amount of 80,000 pesos. Let's just put here accrued payable worth 80,000. Okay, and your WIP here also another debit 80K.
Okay. So your next is next transaction is you are to recognize actual factory overhead at 122,000 pesos. So you to recognize factory overhead, you have to put it first in the factory overhead account, and then you credit whatever is the necessary element of that. Okay. So for this, since this says actual factory overhead, we will first record it at not directly in the work in process, but in the factory overhead account first. Okay? For the amount of 122,000. Miscellaneous accounts. Okay, so you have here factory overhead for 122K, and you have miscellaneous accounts for 122K. Okay? So the next one is also relates to it relates to the applied conversion cost. Okay, so applied conversion cost totals to 202,000, which includes your direct labor of 80,000 and your actual factory overhead worth 122,000. Okay, so this means that when you hear the word applied conversion cost should be recognized in the work in process account. So since the composition of 202,000 is composed of direct labor and factory overhead, and the direct labor has already been recognized in the work in process in your letter C. See, we already debited it to work in process. The only thing that should be recognized in WIP is the actual factory overhead that was transacted on letter D for 122,000. Remember that when you say conversion cost, this should be recognized in the work in process. So, don't be fooled with the 202,000 here, okay? Because this means that the conversion cost should total the conversion cost, or what we can also call as work in process should total to 202,000. Okay?
So we transfer here. We debit WIP. We credit FOH for the amount of 122,000. So we close out our factory overhead here, and we add 122K. Okay.
So next is your says here all produced products were sold. So what we have to do here is to close out the work in process inventory account to finished goods inventory. Okay, so how do we do that? We just simply add all the WIP. Okay, we have 3 WIPs here. Okay, so you have your WIP pertaining to the raw materials, you have your WIP pertaining to the direct labor, and you have your WIP pertaining to your overhead. Okay, so we will sum it up. It will equal to 372,000.
Okay, so we will close this one. F we will close WIP to 372K, and we will put it in the finished goods inventory for 372K as well. So we will add another T account here. Sorry, where can we put this? Okay, let's just put it here. Okay, so we will recognize 372K worth of finished goods, and we will close out WIP. So the sum of this would be 372K. So we already can cancel out this one. Okay. And next said that we already done with the word produced. So this is the produced, right? From WIP, we were able to produce it to finished goods. We were able to convert it to finished goods. So we will now perform journal entries for the word sold. So when we say sold, this is wherein you recognize your cost of goods sold. Okay, so since cost of goods sold, the partner of this is your finished goods inventory. So what we will do here again is to close out the finished goods inventory, the whole amount of 372, again because all produced were sold. Okay, so we will close out our FG worth 372K, and we will debit cost of sales amounting to 372K as well. So we will close out 372K here, and we recognize COS of 372K. Okay. So this final figure, you will see this in your income statement. This T account of COS amounting to 272K, you will see this in your income statement. And the rest, your raw materials, your WIP, your finished goods inventory, you will be able to see this in your balance sheet. So a while ago, we've determined how to perform the pro forma journal entries for your traditional costing system. This time, let's dwell our attention for the just-in-time concept. Okay, so what is JIT? Okay, so just-in-time costing differs from traditional costing with regards to the accounts used and the timing of the cost recording. There are basically three major differences. First, instead of using separate accounts for material and work in process, as in the traditional costing, JIT costing combines this into a raw and in-process account. Okay? So for your traditional, you have materials account and work in process. But in JIT, you recognize these two under RIP. Okay? Under raw and in process account. And second difference is that direct labor is usually considered a minor cost in a JIT setting, so no separate account for direct labor is created. Direct labor and factory overhead are usually charged to conversion cost or sometimes direct cost of goods sold account. Okay, so for traditional, you recognize direct labor and overhead. But in just-in-time, you merge these two and recognize it under conversion cost or cost of goods sold directly. Okay? So the last is that in traditional costing, overhead is applied to products as they are being produced and is recorded into the work in process account. In JIT costing, overhead is not applied to production until they are completed. When products are completed under JIT costing, labor and overhead is added to the cost of goods sold since the goods are sold soon after production is completed. So, the key difference here again between the traditional costing and JIT costing is that the elimination of the account titles. So in traditional costing, we recognize materials and WIP, and we recognize DL and overhead. But in JIT, we just recognize two accounts. You recognize your raw and in-process account, as well as your conversion cost, or you can go straight directly to cost of goods sold account. So let's answer this now. Please take in consideration this problem. Okay, so under JIT costing, no entries are made for transactions B, C, and E.
Okay? So, entry B is not necessary because the placement of materials into production is implied in transaction A. Okay? So letter B also already relates to transaction A. Okay? When the materials are first received. Okay? So no separate entry is made for transaction C because direct labor is combined with factory overhead and may be debited first to conversion cost or may be debited direct to cost of goods sold. So let's start. Again, B, C, and E would be eliminated.
This one. B, C, and E.
Okay? So let's do our journal entries. Again, we will recognize transaction A.
Our pertinent journal entries for that would be raw and in process. Credit accounts payable for the amount of 170,000.
So that is your first entry. And your second entry, you will go directly to recognizing conversion cost, which you can see here for 80,000. Okay, so before the entry here would be under traditional costing is debit direct labor or WIP. Sorry, you will recognize debit WIP, and you will credit accrued payroll. But for this, instead of recognizing it in WIP account, you will now recognize it under conversion cost.
Okay, so letter C. Recognize it under conversion cost, and you put accrued payable amounting to 80K. Okay.
So your next transaction would be recording of your actual factory overhead amounting to 122,000. Before in traditional costing, we record this as debit factory overhead and credit to miscellaneous accounts. And when you close it to the work in process, you debit work in process, and then you credit the factory overhead account that was recognized in the previous step. Okay? But for this one, you will go straight directly to debiting it to conversion cost.
So letter D. Conversion cost, miscellaneous account, amounting to 122,000.
Okay? So now, you've already performed C. As I've said a while ago, you would be only using 2 accounts, okay, instead of 4 when you do the traditional costing. So for the recognition of the raw materials that was issued to production, you record it under raw and in process. For the recognition of direct labor, you recognize it under conversion cost. And for the recognition of factory overhead, you recognize it under conversion cost too. Okay, so its problem says here that all produced units were sold. Okay, so what we will do here is close the RIP account and conversion cost account to the cost of goods sold. So how do we do that? We just credit raw in process, and we credit the total of conversion cost and close it out to the cost of goods sold. Okay,
So for your letter F, your journal entry would be cost of goods sold, and you have your raw and in process and your conversion cost here. Your raw and in process amounts to 170,000, and the total of your conversion cost of 80 and 122 is 202,000.
your cost of goods sold would be
372,000 as well.
Now, I want you to have a side-by-side comparison with the just-in-time costing and the traditional costing. Imagine in the traditional costing, our pro forma journal entries were long. So, but in this case, we were able to reduce it into just 4 journal entries to come up with the cost of goods sold.